Market extends losses to trade near day's low. Nifty falls below 17,550 levels, while sensex sheds over 1,000 points. Banks remain the key drag, with the Nifty Bank Index falling over 3%. Adani Group stocks take a beating.
Tata Motors climbs after it posts a profit after 2 years, and JLR turns cash flow positive. Bajaj Auto also revs up on improved profitability and a renewed focus on the EV segment.
Dr. Reddy's beats estimates on Revlimid generic sales, while Cipla misses expectations. Both stocks gain as analysts remain positive on their future prospects.
Dixon Technologies slumps on missing sales expectations and trimming its guidance. Patanjali Foods and BKG Foods dip on weaker sequential performance, but Chennai Petroleum gains on a strong showing.
A SEBI study reveals that near 9 out of 10 traders lose money in F&O transactions, and the ones gaining most are brokers. The release is aimed at cautioning against the excessive trading, even as India makes the first move to T+1 settlements. Hello and welcome to Business Lunch. I'm Nisha Poddar, and with me as always is my co-anchor Pavitra Parekh. But take a look at the market. It's the bears in full control of the market. There are several aspects which are really working on the market's nervousness, also ahead of the big event that is budget or union budget in the next week. Without much ado, let's take it straight across to Prashant Nair, my colleague, who's going to give us a sense of the full market outlook, as well as where are we headed and the pressure points. Prashant, many aspects that the market is reacting to today.
Oh, absolutely, Nisha. And there is, I think, absolutely no doubt in saying that there is a bit of panic now, right? With a 300-point fall on the back of a 200-point decline that we saw on Wednesday before yesterday's market holiday. And I think it's very, very clear that a large portion of that pressure, of course, is coming from what's happening on with the stocks coming under pressure in the Adani Group. Although I have to point out, and this is continuing coverage, we were talking about some of these names, in the previous show towards the last 10 minutes as well. So in that sense, there is a bit of recovery which one can see. They were all, stocks were down 20, Adani Ports was down 25%. It's down 18%, so it's trying to come back a little bit, some 7% off the lows in the last 10 minutes, mind you. Green is still down 20. The Enterprises has also come off about 4-5% from the lows, but there is clear selling, which is very evident in that group at this point in time. And of course, when it's one of the largest groups, ACC Ambuja, of course, also on your screen. It does create pressure in other parts of the markets. One direct kind of segment which is seeing, I think, collateral damage is banks. Although we've had assurances from brokers like CLSA, JP Morgan, Jefferies, and others saying that, system-wide exposure to the group is not that much. I think we've been highlighting those numbers as well. But this is what an element of a little bit of panic does to the market. And it's kind of, at this point, tough to say where this really goes from here. Global markets, etc., have been pretty okay. It's nothing to do with that. This is a very local kind of issue which we are dealing with. What this sell-off has also done is that it's broken through important levels, right? The low which we saw on the 12th of January, that went early on in the first hour of trade, and now we are looking at slightly longer-term levels. For example, the 38.2% retracement of the entire rise from 15,183, which was the June low on the Nifty, to the all-time high of 18,887. That number is just about 100 points away on the Nifty, 100 points lower than where we are right now. And I can kind of put to you similar numbers on the Bank Nifty as well. So I think you got to zoom out a little bit, because the extent of the fall has been so sharp that slightly longer term numbers, both on the Nifty, the Bank Nifty and other indices, come into sharp view. Earnings is another problem, right? On an aggregate basis, it's not as if earnings have been... Take a look at Dixon, for example, which is down 18-19%. Take a look at Teamlease, which reported numbers, disappointing said, that is down 9-10%. And of course, we've been talking about all the consumer misses, consumer earnings, which missed expectations. So I think there is that element as well. There's no real compelling reason to, at least that's a feeling, to kind of jump in and buy the dip immediately. with some of these names which have disappointed at the downside. So a bit of negative feedback loop, and I think that is what's going on with the market. 310 points, 300 points, 17,583 on the index at this point in time. Back to you guys.
All right, Prashant, thanks a lot for getting us that quick check on what's going on with the market and all of the Adani Group stocks as well. We will keep, bringing you more on that as well. But like we told you, this is also ahead of the big budget queue, right, which is on the 1st. And remember, this will be the last full budget before the general election. So it is important from that perspective as well. And the finance minister is likely to play a balancing act between populism as well as fiscal prudence. Sources are telling us that one of the major themes in the upcoming budget would be to support India's middle class as well as the lower middle class. The other big theme is going to be job creation and urban areas and gig workers. So Parikshit is here with all of the exclusive details that he's picking up on this one. Parikshit?
Yes, we're learning from our sources that Budget 2023 could recognize and acknowledge the importance of the Indian middle class. Yes, the government is likely to announce measures to address concerns of the aspirational classes in the country. What we're hearing is that there will be a rationalization of tax rates aimed at increasing the income in the hands of the middle class. So the budget may introduce a new tax slab at 8 to 10 lakhs with a tax rate of 10 to 15% against 20% currently. 30% tax rate on income above 10 lakhs may be reduced to 25%. The government is also considering rationalizing and reducing some cess rates. Benefits under ATC, this has been a demand over the years, may be increased from 1.5 to 2 lakhs. The tax exemption limit on housing loans may be increased from 2 lakhs currently. Tax benefits under ATD may be increased as well, and this is under consideration. Job creation will be a big theme in the budget as well, with the government likely to announce a scheme to support employment creation in urban areas. There will also be a scheme to support gig workers with loans, and this is under consideration currently. The FM could nudge banks to lend more to MSMEs with interest subvention and loans without collateral. When it comes to farmers, the government is considering increasing the subsidy under Kisan Samman Nidhi from 6,000 to 8,000 rupees. And the FM is also likely to announce a PLI outlay for sectors which are highly labor intensive with high export potential and involve a large number of MSMEs as well.
All right. Thanks so much, Parikshit, for giving us the long list of budget expectations from the Finance Minister, Nirmala Sitharaman, for the next week. But remember that the corporate view is so important when it comes to the budget. And earlier today, we got in touch with the CII President, Sanjeev Bajaj, and the CII Vice President, Sanjeev Puri, to understand what they were expecting from the budget. Let's listen in to their key points.
I believe that the government should continue to focus aggressively on privatization, also focus on revenue augmentation as well. So we would like to see this. In addition, there are some of the key points. The government has been very focused on an investment-led growth strategy. We hope we continue to see that in the coming budget as well, with a 35% increase in public capex like the previous year. We need to continue boosting consumption demand. And we see that it is people at the lower income level who got hit through the pandemic and higher inflation the most. And that's why what we're recommending is a rationalization at this lower income level. I think that's important to note. And lastly, we need to look at all this. We need to look at agriculture so that overall, whether in urban or rural India, we're generating more jobs.
The opportunity in the tourism sector, and that's been part of the strategy also of the government to showcase what India has to offer. Now, that's an area where India has tremendous opportunity, and we can actually work together, showcase it, and create the enabling interventions so that tourism also multiplies over time. Tourism itself is, can create as much as 50 million jobs in the next few years.
All right, that is the word coming in from the CII panel on what they're really expecting from the budget this time around. But on that note now, let me also bring you the CNBC-TV18 budget quiz. Remember, there are prizes to be won every day, and we did give you the question at 9:14 a.m. today. But just in case you missed it, here is today's question. This finance minister asked SEBI in the budget speech to raise the minimum public shareholding in companies to 35% from 25%. And your options are A. Arun Jaitley, B. Piyush Goyal, C. Nirmala Sitharaman, and D. Pranab Mukherjee. So send us your answers on Twitter. You can post it as a comment on the question tweet by CNBC-TV18 News. Use the hashtag budget with CNBC-TV18. And remember, we will be announcing the winner at 3 p.m. today. Hey guys, welcome back. You're still tuned into Business Lunch. Like we told you, there's just no respite for the market. It's still an over 300-point cut that we are seeing on the Nifty. And, you know, bad earnings or even mild disappointments are really being badgered by the market. Take a look at Dixon Technologies. That stock is down 18%. And, you know, we'll talk more about this because this is also after a disappointing set of earnings as well as, you know, the guidance cut that came through by the management. We spoke to them earlier, so let's listen in to what they had to tell us.
I think so. We have gone wrong on the guidance this year. And clearly the reason for that is the mobile business has been slow. And some of the forecasts given by our anchor customer in mobiles, I think so it has not panned out the way, majorly on account of the exports for that particular anchor customer. So domestic markets, I think so we were able to do the volumes that were committed by the anchor customer, but exports, the market was significantly slowed down. And exports, the export volumes did not materialize.
Most definitely, since the 23 number has been pulled down meaningfully over a period of time, the 24 number will also, in a proportionate basis, come off, right?
My sense, yes. But yeah, one has to just give me a couple of months and I will be able to better share those numbers. So this year I'll close at around 4,000 odd crores. And we are looking for 2 large customer account acquisitions. Hopefully, we should start the production by Q2 of next financial year for those large accounts. One of them we should be able to conclude very soon. And those 2 customer accounts should give me additional 4,000 crores. So broadly, yes, we should double our revenues in next financial year.
All right, to another important news of the day, and it's quite a game changer for the Indian stock markets as well. The Indian stock market has transitioned to a T+1 settlement cycle starting today. Now, it means that shares sold or bought will reflect an investor's demat account after 1 day. Now, the transition will lead to faster settlement and also faster liquidity for the investors. In fact, earlier today, we caught up with Nitin Kamath, the founder and CEO of Zerodha, and he says that the move will help in working capital requirements of the brokers. Let's listen in.
Generally, it kind of helps with the working capital requirement of the brokers, in a way, because if you allowed, if you gave credit to a customer who hadn't yet received the proceeds for 2 days, someone has to fund that for 2 days, right? I mean, it used to be the broker's working capital. Now, it kind of helps that it's just for 1 day.
All right, that is the word on the T+1 settlement and the move that we've made towards that. But meanwhile, there's also a SEBI study which reveals that near 9 out of 10 traders actually lose money in F&O transactions, and the ones gaining are mostly brokers. This is the release which is aimed at cautioning against excessive trading. Here's a word from Nitin Kamath of Zerodha, which is one of the largest stock brokers in the country, as you know. So let's listen in to what he had to say.
We've been quite vocal about this for a while now, as in saying that, while 11% make money, I think it's just 1.5% who actually make more than, like bank fixed deposit returns. So, and this is something that, we've published multiple times to, and, shared with the customers as well. So it's phenomenal that, the regulator is doing this, because in a way it's setting the right expectations out there.
All right, some good news coming in for the stock market in India. But at the moment, markets looking extremely weak. We'll slip into a short breather on Business Lunch. More news and updates and also the market action on the other side. Stay tuned.
This government is really focused on pushing the infrastructure bit, and I'm very, very happy that this bit government is working on, and I think this budget will further give boost to the infrastructure spend.
Welcome back. You're watching Business Lunch. A quick look at the markets. And yes, no respite for the markets. Over 300 points cut still on Nifty 50. And Bank Nifty is the one which is really leading the charge with almost 3% cut. In fact, ICICI Bank is one of the biggest draggers on Nifty 50. And second to that is the big boy Reliance Industries. But talking about the Adani group of stocks, which have taken a huge beating in trade today, let's focus on Adani Enterprises as well as ports. These two are recent inclusions divergence to Nifty 50 with lower weightage but still dragging down Nifty 50 by over 50 points at the moment. But still, one has to also see in the last few minutes of trade, they have seen some bit of buying from the lowest point that it had hit. So keep an eye out on these stocks. Kotak, Axis, SBI from the banking pack have also seen some bit of minor gains in the last few minutes of trade. Now, sales of Lamborghini cars in India grew over 30% in the year 2022, and also the company feels that the same trend will continue in this year in India in 2023. And there is likely to be no slowdown, is what the company says. And it also hopes that it is the upcoming union budget that the government will make some announcements on taxation fronts so that costs of imported cars can be brought down. Remember, this has been a big ask by the foreign automakers for India. And our correspondent Danish Anand caught up with the management of the company. Let's listen into this exclusive conversation.
In India, we've been able to register a more than 30% increase in terms of deliveries to our customer compared to 2022. So we surpassed, the 90 cars delivered to our Indian customers. All the new products that we launched, like the Urus Performante, also lately the Huracan Sterrato, the Urus S. So all those products got an amazing order collection. We have an order bank that basically gives us a 18 months waiting time. So it's just a matter of, being able to deliver those cars. So for us, target is mainly driven to production. But again, we would like to, set another milestone next year. And of course, do better than this year. Last year, we delivered the 200 Urus here in India, so that was an achievement. We had like the 400 car on the road. So, I mean, amazing results that are showing that India is growing, as fast as only India can do.
Right. So there are also certain reports which have talked about, the company being in talks with the Kerala state government of setting up a manufacturing plant. So do you have to say anything on that? Is it just a rumor, or there are any plans of setting up a manufacturing plant in the country?
For Lamborghini?
Yeah.
No way. No, this cannot happen, but just because, we are an Italian brand, and it's important that we keep our root in Italy.
So the Indian government wants to push localization. So will the country play some kind of role in Lamborghini supply chain sometime in the future?
But I think the way the government can support a brand like Lamborghini, again, for sure is not like having a local plant here, but supporting us in, for instance, taxation. This can be, something that can help from government side to reduce the burden of taxes on imported products, especially those luxury products that, again, we cannot move them out of Italy. Okay, so this would be somehow, a help from government side.
All right, that is the management of Lamborghini talking about, how India has fared for them and what they can really expect from the government that will come as a boost for their own company. But with that, we're going to wind down on this edition of Business Lunch. It is a red screen, but we're going to hand it over to Midcap Radar. It comes up after this short break.